Hi, everyone, and welcome to The Hash. It is Monday, and we're delighted to be back here for another week of bringing you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and on the show today, we have Jen Sanasie, George Kaludis, and Danny Nelson. Welcome to the show, guys. And we're going to kick it off straight away by talking about crypto regulations. What's going on at the moment? Because it seems like every second headline is about what's going on in DC in terms of crypto rules. So I'm going to throw this straight to Danny. Walk us through all of this.
Absolutely. I'll try to walk us all through it, but it's going to be like walking on a bed of coals because right now in DC, there's quite a lot going on. The biggest news, of course, is the huge infrastructure bill, this 2,700-page, $1 trillion effort to overhaul U.S. infrastructure, roads and bridges and stuff like that. And $30 billion of that money is going to be coming, the senators who are pushing for this bill are hoping, from the crypto sector, by strengthening some reporting requirements that hit the transaction of assets. Now, there's been a lot of back and forth over what exactly this provision will do in the bill. In the most recent version that just hit the Senate floor last night, there would be a more narrow version of the definitions that would not explicitly include decentralized exchanges, but it doesn't explicitly exclude miners, node operators. And so we're not quite sure yet how vast this provision will be. I think that the most important thing that we should be looking forward to right now is the amendment process, because this effort to clarify what's actually in the bill could be cleaned up a little as more senators get a chance to say their piece.
Yeah, it's super complicated, to be honest. Like reading through it, I mean, they had this expansion of what's defined as a broker in the earlier edition of the bill, as you mentioned. And then now in the current version, they've tried to clarify that. But the clarification isn't really much of a clarification, right? It seems like they say that any person who, for consideration, is responsible for regularly providing any service, effectuating transfers of digital assets on behalf of another person. But as you mentioned, this doesn't explicitly exclude miners, node operators, software developers, similar parties. What we're dealing with is this really gray area where we have this new DeFi world and regulators want, the pirate booty haul to include this incredible wealth that's been created in this sector. They don't quite know how to do it. So they're just kind of like grasping at straws and like, well, let's make this big blanket rule and see what we get, I definitely think we need a lot of work on this. And what's scary for me, as Jerry Brito of Coin Center said, is that this is included in a must-pass infrastructure bill, as he called it. So this isn't something that is going to be like up for debate, and we're going to have a long period of time to talk about this and get the language really working well. This is something that's kind of going to be pushed through, and the repercussions could be disastrous, honestly. George, I'll throw to you for your thoughts. Yeah, what's your take on all of this?
Yeah, my take on all of this is that when you see things get thrown around in Senate and in the government in the United States, they have these big blanket statements when it comes to things they maybe don't understand completely, right? We made a quick mention about, transferring money or money transmitters, right? We heard Elon Musk talk recently about, well, if you have a Lightning node and you forward payments, do you need a money transmitter license to do that, right? So there are people who are just running umbrella nodes in their living rooms, which I may or may not have that in my living room. Am I going to be under the auspices of this law or this rule? So over time, are we going to see these senators saying, okay, we don't actually understand what we're saying exactly. We need to keep becoming more vague and more vague and more vague. And then we'll talk about it later under some other bill.
Yeah, language is so important when it comes to the law. And we see this time and time again when we look at all of these documents and bills that really just don't make sense. And it feels like we're rushing to push something through to grasp at some clarity here, but it's just making everything so much more unclear. And so I just really wish that we could have someone who actually understood what was going on in the industry kind of just weigh in on this. It would just, I would feel so much better about all of these regulatory headlines, but it's just so upsetting. I mean, it doesn't explicitly exclude X, Y, and Z and doesn't explicitly include X, Y, and Z. So what does that actually mean? This is just very frustrating. But Naomi, I'll kick it back up to you.
Yeah, well, that's why I think the work that organizations like CoinSetter are doing is so tremendously important, because their whole purpose is to talk to lawmakers, educate them, make sure that they understand, the repercussions of these things. A lot of the time, lawmakers, they're doing a million things. They're probably not even reading these bills that are being put through. So it's, to walk them through this and say, this is actually what's going to be the effect. You may be told one thing, but this is what's actually going to happen. And so they're doing tremendous work there. I hope that they, make a lot of headway in changing this. And this isn't the only bill that we've seen recently. Representative Don Beyer, he actually just put in a bill that would basically allow Treasury Secretary to veto the creation of stable coins while giving, direct power to the Federal Reserve to create stable coins, like basically, setting up a nice little monopoly of on the money supply once again, even though crypto kind of swept that out of the way. He's like, no, let's put that back in place and get rid of all private alternatives. It's a crazy bill that there's so much in it. There's just way too much to unpack in a single show, but we'll definitely, dig into this more as it gets considered. This is not part of the infrastructure spending bill, which is kind of being rushed through. This is something different. So it's not clear when or if this is going to be voted on, or whether this is just something that's kind of put out there as a lot of bills do. But Danny, I'll throw back to you for your thoughts.
Yeah, and I think it's really fascinating to see all this activity at this moment. And I think it's really a sign that crypto is here to stay, and the regulators and the lawmakers are now fully grappling with it. The fact that this massive infrastructure bill, which, as you mentioned, is a must-pass piece of legislation, is getting even a small part of its revenue from the crypto industry, is a sign that the lawmakers are saying, well, this is a tax base that we can utilize because it's not going anywhere. So, even though we're not quite yet sure what the repercussions of it are going to be, and it could definitely do from some clarity, it is almost a vote of confidence in a weird, backwards way that they're turning to crypto. Just for a little while.
The Beyer bill does show some comprehension, though, more than I was expecting to see at this point in time, and it actually gave me some hope. It shows that
some hope. No, they understand it as they destroy it, Jen. They understand exactly what they're doing.
I do think there are some nuggets of hope in there, but we don't have time to argue that on this show today.
Yeah, I'm just talking about the infrastructure bill again. It's always fascinating to me that they start with a number. They're like, this will generate $28 million in taxes. It's like when they have, it's kind of like quotas for speeding tickets, right? It makes it seem like it's not about compliance and about making sure that your society is run well. It's just about, well, we got to raise that revenue. We got to get that pirate booty haul. It kind of drives me crazy when they do this stuff. But let's change track here. We're going to move to something a little bit different, talking about mining. So apparently there's a contract for 30,000 Antminer S19J Pro machines that Marathon Digital is buying for $121 million from Bitmain. It's kind of interesting seeing this. Bitmain, obviously, a huge player in the mining sector. The shipment of machines will apparently occur in the first half of next year. Will expand the company's mining production to over 133,000 Bitcoin miners. Super interesting. I'll throw to you, George, for your thoughts on mining in general and the evolution of this space. We saw a huge amount of, mining was just shut down in China, essentially, and we saw that reflected in the hash rate, and everyone's kind of moving offshore. What does the future of mining look like for you, and how does this factor into it?
Yeah, this is something that is near and dear to my heart here at CoinDesk. It's actually where I spend a lot of my time doing research, because Bitcoin mining is an incredibly important part of the entire ecosystem. And we saw back in May and June time period, we saw lots of crackdowns in China, sort of what you were talking about there. And the hash rate, which is the amount of computational power that goes into securing the network, dropped precipitously. We saw 40% of hash rate come offline. And presumably that mining power is going to move elsewhere. And we're actually seeing a lot of data that supports that. There's a big seminal, I don't want to say piece, but a data service provider with the Cambridge University Center of Alternative Finance. They updated sort of among all this happening of the geographic breakdown of where these miners are. And even before the crackdown came, we moved from 60% of miners being based in China to having about 46%. And that was over a year period. And that was before everything really locked down. So what we're seeing is there's definitely going to be miners leaving China. We see the Chinese-based mining pools. They had a precipitous drop after the crackdowns, and then they've since shot back up. So to what you're saying here, you see Marathon is bringing on a bunch of mining rigs. We're also seeing a bunch of mining investment announcements happening, right? You can just even look at VC funding that has happened this year so far. And we hit a record in total VC funding of almost 290 billion, and 6% of that, roughly 17 billion, was just for blockchain focused companies. A lot of those are Bitcoin mining companies. Over the past years or so, it's been under 1%. So it's crazy. There's a bunch of money coming into the space that actually probably points to the fact that, everyone's talking about coal in China. Everyone in China mines with coal, even though that might not necessarily be true. Now that things are moving offshore to the US and there's money going into that, there's likelihood that we're going to see cleaner energy mixed with Bitcoin mining, which is another just big, important narrative.
I have a question about that, George, because in China, not only did you have coal, you also had a huge amount of hydropower. You had a huge amount of renewable energy in that regard. And in America, isn't it only like 11% of energy is renewable? So it seems to me like maybe things are getting less clean by coming out of China. Like obviously in China, it's time of the year dependent. So during the wet season, hydropower is great. And then during the dry season, obviously they're using more coal to supplement. But it did seem to me like on net, it was cleaner, and yet it was getting all this flack for being unclean because they were looking at China as a whole and how much coal they use as a whole, not looking at the fact that, energy isn't fungible and Bitcoin miners can go wherever particular energy is. Like it's just this very complicated issue. So do you think that we are actually getting cleaner energy by this moving to America? I mean, we also say Marathon is Las Vegas based, and so you got a lot of sun there. So maybe this is something that is going to help them. What are your thoughts on that whole debate?
Yeah, Naomi, I actually completely agree with you, right? The narrative was that they only use coal, but that's really China's energy grid in general using coal. A lot of the data pointed towards China using a ton of hydropower, almost too much hydropower, right? The hope is that when it comes to the US, that there's at least more clarity when it comes to where this energy is coming from, right? There's a lot of slicing and dicing that we had to do in order to say, okay, we are pretty sure that they use a lot of hydropower in China. We're pretty sure it's clean. But, I say a lot of Americans in general are skeptical of the data feeds coming out of China. So we're hoping as it comes to, these more free democracies, that there will be at least better reporting requirements. And I don't want to point towards the Bitcoin Mining Council, right? It's just another mining council that has popped up. But there is hope that with Michael Saylor sort of being this, this new Bitcoin god, he could provide a little bit more clarity, or at least force people to provide more clarity into what we're actually using. So while at the beginning it may not be exactly more clean, at least we'll know how clean or not clean it is.
Yeah. Danny, any final thoughts there?
Yeah, and a little bit of a wild card here on the topic of where the energy is coming from for these new miners. It's going to be in Texas, according to our reporting. What I'm really thinking about right there is the fact that Texas's grid is separate from the rest of the country. We saw over the winter there was a massive blackout that took out like 90% of Texas for a couple of days there. Now, this is not some constant issue in Texas, but as we see more strains on the grid, as people are using more electricity, we could see these issues come to the fore more often. And the fact that they are going to be in Texas could expose them to some of that risk. So that's something we should be looking out for.
For sure. Let's change track here. George, I'm going to throw it back to you. Bitcoin up for grabs. Tell us this news.
Yeah, so everyone's favorite deca billionaire / CEO of cryptocurrency exchange, Sam Bankman-Fried, known lovingly as SBF, is at it again. So SBF is the founder of FTX, a cryptocurrency exchange, and they've really been on an advertising tear for the past really 6 months, but maybe a year. They bought the naming rights to the Miami Heat of the NBA's arena. SBF famously became friends with Tom Brady on the internet. And recently they partnered with Major League Baseball to show the umpire on the umpires' jerseys that have the FTX logo. And now their most recent new exciting marketing scheme is you can win $100,000 worth of Bitcoin if you as an individual are determine or you guess who's going to hit the longest home run this season. Really what that does, in my opinion, is shows that retail is important too, right? This is not just for the billionaires, but for the billions, which is something I stole from Lightning Labs founder. But FTX hasn't really built out their US focus yet, right? They don't have their full suite of products available to the US audience. So it shows that they're really, really focused on the retail investors are coming over. So it's super exciting, I think, for adoption of cryptocurrency in general, but also Bitcoin and all that good stuff.
Jen, what are your thoughts on all of this?
I'm waiting for someone to confirm that Tom Brady and SBF became friends after CoinDesk's consensus. I really think that we had a small part to play in this amazing relationship. When I read the story, we just bring people together.
Which is such matchmakers with Desk Coin, exactly.
As I was reading the story, I mean, I thought about the narrative we talk about on this show often. It's that of sports betting and crypto. You know, the people who watch sports, they get a real kick out of participating in betting with their friends or on platforms. And now we've introduced crypto to that audience. And what a fun way to get people who may be afraid to take that next step into, you know, getting a wallet or getting onto an exchange and owning Bitcoin, to get Bitcoin into the hands of the mainstream. So I think it's like a fun way to do this. I would love to see SBF and Tom Brady's take on the "Take Me Out to the Ball Game" song. Like maybe we can get Bitcoin into that song, make a modern version of "Take Me Out to the Ball Game." Yeah,
that sounds fun. Bitcoin.
Yeah. I know, right? But I don't know if anyone on this panel is a baseball fan, but who is likely to hit the longest home run, and should we all get involved in this competition?
Well, I'm definitely not sports desk. George, are you sports desk? Because
maybe not baseball.
I could take a whack at that. There's a pitcher.
Go for it, Danny.
Yeah, there's a pitcher who also is a hitter. I forget which team he's on, but his last name is Ohtani. And he is a powerhouse.
Angels.
So if I had to guess, my guess would be Ohtani is going to hit the longest home run of the season as a pitcher hitting.
Are you going to enter the competition?
I would strike out or get hit by pitch. Probably hit by pitch.
It is a huge amount of money to be giving like to one person. You'd think that if they were doing a giveaway that's trying to get this in the hands of people, they'd be like, oh, you have the potential to win part of a $100,000 stash of Bitcoin. And, you know, instead it's just like you're going to end up with all these people participating and like one person's going to win and get the whole pie, and everyone else is going to be like, oh, I almost got involved with Bitcoin. Oh, well, I'll wait for the next competition. Like, it would have been cool to kind of see something that is like, you know, you have chances to win smaller amounts in there. But maybe that's the next thing. I mean, they are, as you said, on this marketing binge and throwing away a ton of money. The amount that it cost them to get naming rights to the stadium was astronomical, and they are going all in. So, you know, this isn't the last that we're going to hear from FTX for sure.
Yeah, Naomi, I agree with you. And I mean, I've said this on the show before, but I think this is FTX, again, just building that trust with their mainstream audience, you know, getting their name in front of people who are looking for an exchange, but are still looking for that trust factor. You know, we hear all these stories in the news about people who are losing their money or exchanges that are getting shut down or facing huge regulatory backlash. And so if FTX can do these things to get in front of the mainstream audience, I think, you know, there's a lot to be said about that. But George, I think I saw your hand go up.
Yeah, I think the last fun point I want to say about this is that SBF is sort of this the rise of the non-suave CEO, if that makes sense, right? We can, minus the fact that SBF is very, very wealthy and the fact that he's very brilliant, it feels more relatable, right? When he goes on shows and talks, he has this messed up mic that sounds very grainy, and he's not exactly the most beautiful man in the world, right? He's not like put together.
He's so cool.
I love that.
I think he's so
cool.
Totally.
Yeah, he's such a scruff. I love him. We love you, Sam. Yep. So come chat with us. So let's change track here. Exactly. Jen, I want to know what's going on with NFTs right now, because apparently we've been hitting records.
Yeah, markets for NFTs continue to climb. So we hit record highs in trading volume and average prices over the weekend. Trading volume of NFTs on Ethereum is up 338% from the equivalent week in the previous month, and that's according to OKLink, while OpenSea saw record-breaking trading volume in the past 2 days. So the headlines were very extreme at the beginning of this year. We had the $69 million Beeple. There were tens of millions of dollars being thrown all over the place. I think we predicted time and time again that this was going to fizzle out, but we keep seeing record highs, not only in trading volume, but in investments from VCs and also retail investments. So I'm going to kick this off to you, Danny. What did you take away
Danny
from this story?
Danny is frozen, so I'll jump in first. Yeah,
Naomi, what did you take away from this story?
Yeah, I mean, I think that we do. You hit the nail on the head when we keep predicting the fizzle out of this market, and then we just keep hitting record-breaking highs, which is fascinating to me. You know, it's interesting, and I mean, I've mentioned it before. I'll go back to it again, but Adam Levine's analogy about NFTs is just so spot on, right? Where he says, we started out, it's basically NFTs are like this key, and first of all, we figured out how to paint the key, but we haven't quite figured out like what to do with it. We are starting to see that expand, but what's interesting to me is that it isn't that expansion that seems to be leading all of these like record highs. It's still that traditional, like, how do you paint the key? Like the art world, marketplaces. So that's really interesting to me and very unexpected. But Danny, go to you. What are your thoughts on this NFT record breaking week?
Well, now that I've my camera feed has unthawed, I do think that this is a sign like that, we really do have to pay attention to NFTs. They're popping up everywhere. Lollapalooza just had an NFT, that big music festival in Chicago. You're seeing a whole lot of activity from CryptoPunks, but there are just so many different projects out there that are pushing up volume and pushing up transactions. We're seeing more volume than we did at the peak in March and April, but in terms of daily transactions, that number is still far down below that peak. So we are not seeing as massive a push across all NFTs and probably more activity among the most valuable ones. But I do think that NFTs as a medium are probably, they have a lot longer legs than even I thought just a couple of weeks ago.
Do you think that some of this has to do with like the augmentations in the market due to inflation, and people are just looking for places to park their cash and they're not quite sure what to do with it? They're probably diversified into other asset classes and they're just thinking like NFTs, that's the next asset class. I need to put my money in something that potentially could get me back my money later on, because this seems to be a fairly liquid marketplace. People seem to be, buying and selling these NFTs. They're like collectibles. Perhaps this is something that could hold the value of my money. Like, do you think that's playing into it, or is this just like a new craze that's a novelty and people are just still testing the waters?
Well, I think that it might be true, but really only among the crypto rich. Like if you're a traditional investor and you're looking to diversify your assets, I don't think we're at the point yet where you're going to be putting $1 million into a pixelated head. Maybe next year.
That brought me to my next question. Is it just the crypto rich or the rich who are participating in NFTs? We saw Gary Vee bought a CryptoPunk for just over $3 million. Late last week, I think it was announced that happened. And I mean, there was a story about Mila Kunis last week. She has a new show coming out where to watch the show, you have to buy an NFT of one of the characters. And that's $750 for an NFT that grants you access to watch a show. And for me, that still feels a little bit expensive to watch a show when you can pay $10 a month and watch Netflix. So is it still the uber rich that are fueling this? And how do we get to a place where everyone can participate in NFTs? I don't know if you have any thoughts on that, George.
I don't know if I necessarily have thoughts on that in particular, but I actually agree with everything you guys are saying. A lot of where I spend my time is mostly focused on Bitcoin, and so I have sort of a side-eye view to what's going on in the NFT world. And I think you pointing out Mila Kunis getting into this, and the people that are getting involved are these media people and or entertainment figures that are kind of bringing legitimacy to the NFT world. While I don't think it's necessarily a place you would look to now to store your value, there's a couple of iterations down the road where NFTs might actually represent real digital ownership of, I don't know, a show. And maybe it wouldn't be $750 for the show. Maybe when it becomes more of a widespread thing, maybe it's $5 so you can own your favorite Game of Thrones character or whatever.
For sure. And I do think it mimics the traditional art world in terms of that hype. Like when you buy a nice vase, you could buy 2 vases that probably look very similar. One of them could be like $1 million. One of them could be from IKEA. And the difference obviously is going to come from the name of the artist and maybe who's bought the vase before and which gallery it was being sold at and all of this. And so that hype factor in art is a big factor. I think that's really playing into the NFT world where you got the Mila Kunises of the world jumping on board and the Paris Hiltons jumping on board and saying like, this is this great thing and I stand by it and it's something that I created, and everyone's like, I want to own something that they had. Like, I don't understand that mentality, but I get why it may be attracted to some people, and I do think it's people probably with a lot of money right now. But we'll see, as we said, where this evolves and what kind of use cases we see evolving in the future for NFTs. But that is our show today. But stick around at 3 p.m. We do have All About Bitcoin with Christine Lee, and then tomorrow we are back at CoinDesk TV at 9 o'clock, our first mover, so make sure you tune in there. We are The Hash. We come to you every single day at 12 o'clock talking about all the latest and greatest in crypto and culture. George, Danny, Jen, thank you so much, and see you tomorrow.
Bye, guys.